Employees like Rajul working in private companies are very happy. Now, he can buy health insurance policies for his 70-year-old elderly parents. It has said that insurance companies should provide health policies for people of all age groups. Now, insurance companies cannot refuse to provide health insurance cover for elderly people over 65 years old. Until now, insurers generally did not cover health insurance for people over 65 years old. However, there was no rule from the regulator regarding this. Insurance companies had their own rules in place. IRDA's new circular is an important step. Insurance companies will introduce new products to meet people's needs. Soon, you may see health insurance products that provide comprehensive health coverage for the entire family. Now the question is, will elderly people over 65 be able to easily get health insurance coverage? Well, generally, it is not easy for the elderly to get health insurance coverage. In fact, as age advances, the risk of illness and hospitalization increases. This puts a burden on insurance companies for claim sanction. That's why health insurance companies avoid insuring people over 65 years of age. Tax and investment expert Balwant Jain says that the premium for health insurance for senior citizens is already quite high. Insurance companies will introduce new products for older people, but their premium will also be higher. However, it is not yet clear how much the insurance premium will be, and will it be certain that if a person has diabetes, asthma or any heart-related disease, insurers will increase the loading on the premium, meaning the premium will become more expensive. In such a scenario, the amount of health insurance premium may be beyond the reach of ordinary people. Even now, the insurance companies providing health coverage for senior citizens over 65 years old have very high premiums. For example, if Rajul's parents are 70 years old, if they opt for a coverage of 10 lakh rupees, according to the Policy Bazaar, he will have to pay 1,03,934 rupees for Niva Bupa Health Companion Plan. While, on the other hand, he will have to pay 1,23,634 rupees for Star Health's Star Premier and 1,13,243 rupees for Royal Sundaram's Next Gen Plan. If his parents have diseases like diabetes or asthma, the premium will increase further. It is also possible that the annual premium may exceed 2 lakh rupees. Now the question arises, what should Rajul do for adequate insurance coverage for his parents? Balwant Jain says that Rajul has two options. The first option is to first talk to the health insurance company. If the premium is within their reach, they should buy the policy. If necessary, they can also opt for a policy with loading feature, that is, a policy with high premium. However, before finalizing the policy, he will need to pay attention to some basic things. Rajul should first inquire about the capping on the room rent. In some policies, only a certain percentage of the room rent is covered. This is under the daily cash insured feature. For example, if there is a 5 lakh rupees cash insured, then the room rent will be only 5,000 rupees. In today's era, you won't get a room in a good hospital for such an amount. If the insurance company has allowed you to make 70% of claim on room's rent, then they will also cut 30% claims you can make on other expenses. After that, Rajul should pay attention to the pre-existing disease clause, meaning the waiting period for pre-existing diseases. He should opt for a plan with a minimum waiting period. Now let's talk about the second option. If Rajul has group health insurance from where he works, then his parents will also be included in it. In such a case, Rajul should keep the office policy separate for his parents and buy a separate health plan for himself. Because Rajul is young, he will get cheaper insurance cover. It is also possible that no loading will be levied. Another big benefit will be that Rajul's parents will not have to go through the waiting period for any treatment of pre-existing diseases. Like Rajul, not everyone has group health insurance policies. In such cases, It is better to create a medical fund for treatment after retirement. This amount should be invested in a place where money can be withdrawn when needed. For this, mutual funds and bank fixed deposits can be good options. However, the initiative of IRDA to provide health insurance cover to the elderly is commendable, but due to high risks, insurance companies may proceed cautiously in this direction. This raises doubts on fair implementation of IRDA's latest directives. Therefore, it is necessary to make arrangements for health security after retirement in advance, as paying health insurance premiums after the age of 65 may not be easy for everyone.